Welcome, everyone. Today we have Margaret Brodie of Rubicon Organics to join us. Rubicon trades on the TSX Venture Exchange under the symbol ROMJ. Margaret, this is actually an update. We had you in here a little while ago, so we're happy to have you back. And love to get an update on the company. But before we start that, let's make sure everybody understands what Rubicon's all about.
Fantastic. Thanks, Paul and Trevor and team, and nice to meet everybody, and Happy New Year. I will give some background on Rubicon Organics, assuming that people have a little bit of information, but I think it's often nice to just get an overview. Rubicon Organics is one of Canada's premium and premier companies, and in fact, what you don't see, because this is dated November. The deck that's in front of you, we just recently at the Oscars of Canadian Cannabis at the Kind Awards won LP of the Year, which I was absolutely thrilled to do. More importantly for our team, we really view that the bud tender, like the bartender, is extremely important in our relationships. And we won the People's Choice Award, voted on by over 800 bud tenders. And when you walk into a cannabis store and you have everything's behind a case and you're getting a referral often or asking for what you want and interacting with the bud tender, that recommendation is extremely important. So we play in the premium space. We're all organic product, and we're extremely proud and community oriented and driven company, because we believe that our brand success comes out of groundswell, comes out of community, and comes out of great quality product.
Margaret, I'm going to ask you to hold one sec. We're having a bit of technical difficulty with this, with your presentation. Let's
do you want me to stop sharing and reshare?
Yeah, stop sharing and try to reshare. Yeah.
Sure. Hoping that will work now.
It looks like it's coming on. If I can have somebody else tell me I can see it, I'm hopeful everybody else can see it. Okay, perfect. It's working now.
Great.
So we'll turn it back over to you. Thanks.
No problem. So I'm gonna put up our classic disclaimer. I'm sure that everybody will read it in detail. It is very important. But who is Rubicon? We are a leader, if not one of the leaders, in Canadian cannabis in both premium and super premium products, which means that we play in the area of the market where the profitability is. We are focused on delivering organic certified cannabis nationally, and we have 3 flagship brands, which you can see here on the right. We've got Simply Bare Organic, 1964, and Wildflower, and I'm going to speak to each of them in a moment. But more interestingly, we're unique in that we've delivered 6 consecutive quarters. Now this is to September 30th. We're in a quiet period to December 31, and 5 consecutive quarters of operating cash flow positive. So we really are moving the needle. We are, and that is coming out of us delivering gross profit with every product we sell. In the Canadian cannabis industry, and we will speak to it a little bit later with Paul, there's a lot of people selling really below cost just to clear out any inventory at any cost. We focus on quality, and we believe quality is what's going to drive a brand promise and deliver brand loyalty, recognition, etc. We are focused on premium, the classic 80-20 rule, which is 80% of the market is sitting in a in the value or in the volume game where they're competing on every penny. What we're doing is we're playing to characteristics of beautiful quality product that people respect and enjoy, and ergo are willing to pay a fair price for that product. And it's all about the price to value equation. We also are looking at shifting that and expanding our brands across to appeal to more, to make sure we're appealing deeper into the different consumption experiences that people have. So as we have flower, and we've led forward with flower as a flower first company, where we've demonstrated what we can do beautifully, we're actually expanding that across into edibles. Last year we launched them, and you're going to see a little bit more in this presentation as well. But what we've proven is that the Canadian cannabis market can be profitable. We have a team that it's experienced. They're building on reputation, and we're building a brand portfolio that's getting recognition. So just because we had a stop in the minute, I'm going to repeat some of the exciting things that happened this year and in December is that we very proudly won Canadian Cannabis LP of the Year in December. Not updated in this presentation. I've just realized my error. And more importantly, we won the Bud Tender's Choice and the People's Choice Award, which really goes to speak to what we're actually building in this industry. If you think about when you walk in a grocery store or in a liquor store, you expect every time that you take a can of Molson Canadian, it'll be the same experience every time. We're looking to build that, but probably a little bit more in the Scotch whiskey portfolio quality than in the Molson Canadian quality. So from there, where are some of our numbers? And this is always interesting. We have around 2% market share that, that moves up and down the way, depending on the way you cut the number. What we care a lot more about is the premium market share. We sit between 5 and 7%, and we move around in there depending on how the numbers shift. Our Wildflower brand, you're going to see in a minute, dominates in the topical and the CBD market with 26% market share. We are based in BC, Delta facility, which is about 25 minutes from my house. Means we can get labor force in the Metro Vancouver area in a very straightforward manner. And we watch our costs. We've been able to deliver about 7 million in operating cash flow to end of Q3 23. We've got adjusted EBITDA consistently quarter over quarter. And we're cheap on the money because we're actually trading below our annual revenue. Actually, we're about a $28 million market cap today. And our revenue last year was 35 million. So you can see if you were to apply a classic CPG multiple, we're looking on the low end of that range. How do we do it? Well, it all comes from doing things really, really well. Speaking to our two flower brands, what we're excited about is that we actually have groundswell from the bud tender themselves. And bud tenders ranked in, it was a study we didn't commission. It came out with what do they recommend the most to their consumers. And two of our brands were in the top 3 most recommended. And I can tell you that the graph on that was the top 3 and then everybody else. We were extremely proud to have Simply Bare in 1964 recognized in that category. Pretty excited about the opportunity with Wildflower. We wholly own the brand in Canada as well. And it is Canada's favorite topical. It tends to be a product that once you try it, you use it every day. And I can say that I am somebody who does that. We just recently launched edibles under Wildflower as well. Very excited about that because we're looking for that everyday wellness consumer who is consistent with what they take. So for example, if you go out and are looking at consuming a gummy for sleep, you probably want to take the same gummy every day, and that's what the Wildflower consumer is really looking for. It's that CBD, CBG, minor cannabinoid impact, but also the stick really is a natural replacement for a Voltaren or a product similar to that from the pharmaceutical industry. And how do we do what we do? Why do people love our brands? It's because we're consistent, and we really believe in quality. So again, speaking to that Molson Canadian example, what we do is when you open up one of our products, you can't see inside the jar or in the glass in Canada under the way the regulations are. We're building the brand promise that when you open up one of our products, it's going to be good. It's not just going to be good, it's going to be great. And you're going to love what you consume. And that's what builds that premium promise. So with our brands, we're consistently winning awards, whether it's Indica of the Year, whether it's Brand of the Year, whether it's individual strains winning and getting that recognition. With each brand, it's about that brand promise and making sure that we're looking at the strains and the qualities that our consumers are wanting and really listening to them. We're not trying to be everything to everyone. We're trying to do what we do very, very well. And I think later we can talk about the large cannabis companies and what they've done. What we're doing is focusing on the consumers who, and you'll see on the next slide, actually, I think it's a couple slides later, for Simply Bare are focused on people that are really interested in flavors and taste and quality and real connoisseurs. And with 1964, we're looking at the individual who really came from the legacy market and is looking to convert across into the legal market. So we're bringing out strains that were famous in the legacy market, that are loved, that are well known. And our Comatose one, Indica of the Year, has been a top seller ever since. Comatose is a bit of an intimidating thing to think about consuming, and it does have that effect. But it's something that people enjoy, makes them feel great. We're very proud of the consistency that we can deliver to our consumers. And that's where we start to move the needle with consistent sales and repeat rate of sale. What we've seen in the industry, and this is where the operations lead to the brand, it's that several times, and if you go on the Reddit sites, you'll see people reduce out, say, oh, I bought this, I tried it, I'm never going back to that brand. We don't believe in that experience. We believe that every experience is a quality experience. And if that takes a little bit more time and a little bit more care and a little bit more hustle, we do it every time. So how do we get that loyal customer? It's about the process that we use. And the process is our IP and our secret sauce, but we do believe we can scale it, and we believe there's opportunities to scale. And that comes from building that brand promise. Now we're going out and we're looking for how else can we build that brand promise as we go across. So our products are high in terpenes, which is the flavors and aroma and the impact that you have around cannabis, but it's also delivered in a way with care all the way through the chain. Our management team, it has shifted quite a lot over the last 18 months. And I think you can expect some further news from us to come very shortly. But we've really spent a lot of time looking for consistency and steadiness. We've been very fortunate in being able to onboard some really, really interesting, thoughtful, strategic individuals in the last year on our board. And we started there, and the board's making the decision on the CEO role. So each of the individuals brings something unique and a different perspective, but is excited about building on what we've got, because we firmly believe that we've got a business that can actually become one of Canada's great premium businesses. We want to be the Arc'teryx of weed. And for those of you who know outdoor sports apparel, Arc'teryx started really looking at, a very singular climbing focused, beautiful quality product, high end. And then they've been able to scale that out. And we think you have to start with that promise, start with that focus, and then be able to move and go bigger and grow from there. And that's what we're looking to do. So here's our portfolio of brands. Simply Bare Organic, our super premium brand, very interesting flavors, unique. We launched Canada's first live rosin roll. We're looking to do things that consumers who love cannabis, this is what they want to consume, and they respect it. Recently, at the end of the year, there was actually, it ended up being one of our competitors did a Reddit survey of product of the year and did a bracket, a la sports bracket, and our White Rainbow, which I think is possibly the best product we've ever grown, made it to the finals against their Rainbow Driver. And it did happen to turn out that that they had started the contest. That's what was said at the end. So they might have had an advantage in getting Reddit voters out there. But to be frank, they're a wonderful Canadian BCLP, also growing organic. And it goes to show that consumers, it got very close in the head-to-head after sort of the 64 down to the bracket of, or maybe was it 32 down to the final bracket. We were in it. And we were extremely proud to be in a category with that group. And also to represent BC organic flavors coming forward. So all of that groundswell really is leading to that brand is starting to capture and be recognized. And that's really important when you think forward on this industry, and we'll speak to that. I've spoken about 1964. Homestead is actually, if anything doesn't meet our quality standard, it moves into our Homestead brand. Why that's important is we're in agriculture, and agriculture is going to have things that go wrong and smells that aren't quite right, or a seasonal impact. In that environment, we actually have a route to sell everything we grow, and we sell it profitably as well. Our Wildflower, we talked about, has 26% market share. It is positioned really beautifully because we believe the cannabis wellness market is going to grow over the next number of years. And it's a product where it tends to be from recommend, where an individual goes into a store, they try it or they're given it, and then they stick to that product and they pass it on to someone else. I've been at, I was in Manitoba at a wedding, sitting next to a woman who was, who I would have no idea would be interested in a cannabis product. And she turned to me and said, "You're in the cannabis industry. Wow, I use this great product to stick. Your company should do this." And I said, "That's our company." And you wouldn't believe how far, once people get into these products and into the Wildflower brand, how much they love it and they repeat purchase. So we're really looking to invest in that going forward. We've talked about our property. We've got a 20-acre property in Delta, BC. What I love about this is not only are we in an area where we can get great workers, we can get, we're near a metro center, we have wonderful weather relative to other places in Canada, but also we get indoor quality at greenhouse cost with the environment that we have. And the way we can prove that is we have industry low loss rates. We're very diligent about writing things off, and we don't write things off. Those in the grocery industry would call it whole carcass utilization, where we prefer to use the term whole plant utilization. We get to use everything that we grow through our processes. So if something isn't used for pure flour play, then it's shifted over and it's turned into hash, it's extracted, etc., and it goes into our other products. In 2023, these were our key priorities. Now, we have not rolled out our 24 priorities. They're actually sitting on my desk today. We were looking at how do we optimize yield and always look to get better. We are on what we call an endless pursuit of quality. We will never be happy with our quality. We will always be driving to improve that. We're also looking at how do we maximize our premium opportunity. And, you know, in a recessionary environment, we'll speak to that in a minute about the pressures around this, but really we're looking at launching products that do not require our facility capacity. So not using our balance sheet, using other people's balance sheets to grow our brands. And you can see that through our edibles launch. It's been a very successful launch under 1964, rose from nowhere. We launched it in April in BC, and then in June, July in Ontario. It's gone to the #3 premium edible in the country. And that was from a base of 0. And it was because not only are we not using our capacity, we're doing a quality product. We're one of, if not the first to launch a live rosin edible. And it's a unique product that speaks honestly to the consumer and gives them a great experience that they know is going to be repeated. We're always looking at driving efficiencies in processes and onloading a system, taking reliance off of key individuals and making sure what we do is repeatable so that we can get bigger. So we are, and I know Paul is very focused on value investing. We're people that believe that we're in business and it happens to be cannabis. We're not in the cannabis business. So I think you've got to remember anytime you're making decisions on spending, cash, etc., you're in business, not just to fly to a fancy party or to have a big booth somewhere. It's actually to drive a business forward, employ a lot of people, and return value to our shareholders. And all of that comes from a team that wants to be there, a proud and engaged team. We're actually really proud of what we've done. We're working on lowering our turnover, improving our engagement scores, and all of that speaks to quality and how our team shows up every day in the environment. So what's the growth opportunities? And I think this is where Paul may want to step in, but we want to have organic growth through our facility and grow the amount of biomass that we've got. We're also looking at adding those accretive products into our mix and then leveraging that power to use contract grow to fit under our brands to make them grow larger. Simply Bare is an organic product that will always be grown out of our home in Delta. But as we build the infrastructure and distribution, there are over 1,000 LPs in Canada right now, and a number of them do not have the ability nor the desire to actually build the channels, manage, you know, the Walmart style or Loblaws style interactions that you have with the Canadian provinces that are the largest buyers. We can do that, and what we're looking to do is bring more biomass through and take the incremental gross profit and profitability to power our brands for the future. And I would say lastly, and before I shift over to one last topic, we will be opportunistic. We see that this industry is going through a very difficult time and we expect it to continue. 12, maybe 18 months, maybe less than that. And from the other side of that is where we see real opportunity, but we are getting ready for that time. We believe that the winners are emerging now. They are not the early leaders. The early leaders had an early advantage of licenses and lots of cash. People who have built real businesses that really understand their consumer, that are very tightly focused on delivery, are the ones that we see emerging in, and we're very proud to be in a handful of groups like that. So you can see all of our financial results, and I've spoken to them, but what I'm going to talk to a little bit is what's actually happening in the industry, and this is, Paul, where I'd pass it over to you. The Canadian legal industry, 4.5 to 5 billion, remembering that the black market is still an estimated, there's lots of estimates, somewhere between 40 and 60%. I think the number is probably about 45% of the market remains in the black market. And there's an excess quantity of low quality production in Canada. We have an oversupplied situation, which we are seeing having a big impact on price compression in the market. But that can't last forever. When people are selling below cost, they can't continue. Right now, companies are just struggling to turn anything into cash to pay their bills. What does that mean on the other side? It means that there can be continued CCAAs and bankruptcies in the sector. It probably needs some government enforcement in terms of CRA actually cracking down on people that are not submitting their excise, and we can speak to that. It means on the other side of this, there will be natural winners because our customer exists, our brands exist, and there's a love for what we do. And there's something to be really proud of in the products that we produce. In particular, coming from British Columbia, we're very proud of BC Bud. And we believe that the operating teams are going to be the winners, the people that are focused on looking at the industry 2-3 years out, seeing where it's going and saying, I'm going to get there and I'm building all the things to have in place to be on the other side of that. We all know in any CPG type industry, there is quality and there is a quality range. We expect to be in the top end of that range, and we expect to be winning in the top of that end of that range in 2-3 years as well, as we are now, I would add. Yeah, so maybe, Paul, we can leave things there. I know that was a quick overview and awfully wordy. I can talk about our business for hours. I'm very proud of it. But what direction did you want to go, and how can I answer the questions of your people?
Let's stick to sort of what you just talked about right now. I mean, one of the things we constantly hear, especially from shareholders that are paying attention, is just that the state of the industry right now, the fact that there's a number of companies that are struggling, and you sort of mentioned some timelines in terms of when you think the market might right size itself. What do you think we really need to see, or what's almost a good sign that the industry is consolidating? How many companies have to go bankrupt? How many, what has to flush out for this industry to right size itself?
I think it's a great question. I think if you are at or near EBITDA profitability now and with cash, and you have a product that consumers love, you're going to get through this. I think you need the cash to assume that price compression this year in competition is going to be fierce. We have seen significant price compression in the second half, and we've also seen recessionary impacts. So we've got a double whammy happening in our industry right now, and we've had extensive discussions about it. We look at having products across multiple price points to be able to appeal to, the lipstick index of, I will have that small treat instead of buying the large item. But when you're selling below cost just to turn your inventory, you're in the toilet bowl, right? So to speak, of what's happening, and you can't get ahead of it. So what we actually need to see is banks and CRA and the lenders saying enough. What I believe has happened is a number of the lenders have realized that they cannot sell the assets for what they lent them for. So they've gotten out over their skis, and we've recently heard the term super adequacy adjustment from appraisers. I'd never heard the term before. I didn't know what it meant. But broadly, what they're doing to some of these very overbuilt facilities, and these are 100 million plus, they're saying, okay, I can see even at a salvage value, you're calling it 25 million on 100 million, but actually I'm going to take another 30 or 40% off of that because you've still overbuilt what you needed. You don't need all of that to actually use the facility for other purposes. So all of that being said, it's about cash. It's about how long will those lenders go through. There's a public company this week that a bank just allowed a 3-year extension on their loan. The covenants are pretty tight. I believe the extension on the loan is because they don't think they can sell the assets for anything. So they'd rather just take a flyer on the loan than be able to sell the assets. Now, I think what ends up happening is you start to lose people. You can't keep talent. The quality goes, and it becomes that toilet bowl drain. 12 to 18 months would be our guess. If it's longer, we're prepared for anything. That's on the supply side. The second double whammy is what's happening on the recessionary pressure side. So what we really saw in our business, and you can see it in our numbers, was effectively July 4th or July 1st, if you count it a day, or the 4th of July, we saw a shift in consumer behavior. And I know that's been seen across the CPG landscape. So whether you look at Canadian Tire and Canada's results or some of the big durable goods companies, sales really have been choppy and high and very poor Julys, very poor Novembers. We're seeing that echoed in premium goods. And fortunately, you know, we remain on our guidance of growing our net revenue, growing our adjusted EBITDA, etc. But I think that the consumers being very, very nervous to spend money is another thing that could accelerate this for people. So when does the industry turn around? It's when we start to see, I think probably 10% of the LPs turn off would be about the number, probably about 100. And secondly, we see the economy start to shift, and that's going to come with lower interest rates. I said before this call to people that are here, and I asked Paul, well, the news out of the US this morning is that inflation still remains high. When will the Canadian, will the Bank of Canada reduce interest rates before the US? And that could be really an important signal for consumers to start spending again. And I think that's where we've sort of battened down the hatches to say what's going to happen in the marketplace in the next year. I think it's going to be pretty tough. But if you are driving forward on profitability and investing in your business and have a brand and a consumption experience that is excellent, you'll get to the other side of it. What you want to do is be ready to put the pedal to the metal, right? And invest where you can really win. When does the consumer feel flush again? What do you think? I mean, I notice people making decisions on 50 cents, right? You walk into a store and everybody's buying the no-name brand. People aren't going to Whole Foods, they're going to No Frills in Canada. So we're really seeing that shift. And that shift has occurred since July 1st. When do people feel flush? That's when we're going to start to see the other side.
Yeah. And so, I mean, you mentioned sort of we need to see 100 companies kind of turn the lights off. Are we seeing distressed sales right now? Has it started? So it is out there.
We've seen them. We saw CRA actually shut one company down at least this year because they hadn't paid their excise. We believe that will continue to happen. The trigger for it is when your excise license comes up. So broadly, for those who aren't aware of how the excise system works in Canada, if we sell our product recreationally to the provinces, who each have a liquor distribution board that sells it on to retailers, we charge them a price. Included in that price is the excise tax. So they actually, if I sell them a product for, call it $7, they add $1.50 to that, and I get $8.50 in cash into our business, but I've got to remit that $1.50 over to the CRA. Our ratio, because we sit in the premium product price, is about 25% of our gross revenue goes to the government. We remit it regularly, and we keep that balance up to date. A number of companies, when they've invoiced the provinces for that money, they've gotten paid the $8.50, but they haven't remitted the $1.50 to the federal government. And as a result, they've had a working capital advantage. Every 2 years, they have to reapply for their CRA excise license. And this is where the rubber hits the road, so to speak. If you are not in profitability and have a payment plan that is agreed that you can satisfy that, the government is not in the business of giving out interest-free loans or low-interest loans, especially in this environment. So what they need to do is prove that they can pay that amount to be able to get their excise, their next 2-year excise license. So we've seen a number of those already occur. We expect that that's actually going to continue over the course of the next, I would say, 12 to 18 months.
Wow. Okay. I was going to talk about excise tax, but now you explained it all, so I don't even have to ask that question.
Well, I hope I explained it well, because it is a great, I have a meeting with a senior minister at the provincial government here in British Columbia. We've been working very heavily with a C3 organization here in Canada to lobby the government for change on excise. But to be clear, excise would actually, for a premium company, it's a much smaller percentage of our revenue. It's actually the value players. It is significant to us. It would be massively significant. So but the value players, because of the way their total dollars, if we're selling at a $7 per gram and we're invoicing the province $8.50, they're selling at $4.50, and they're 50% of that.
Right.
You know, if you're selling at $4.50 and you're only getting $3 and it's cost you, you know, $2.50 to get it out the door, you're losing money.
Right.
So there's a number of people out in our industry that are losing money on every sale. And that's where that excise tax money that they're getting from the government becomes really important for working capital. So they're building these amounts.
Mm-hmm.
I think it would have been interesting if when the government had put this system in place, they had it paid directly from the province to the feds,
Mm-hmm.
because it would have bypassed this issue.
Yeah. Yeah. No, that sounds right. Okay, a little different tack here. We saw a bit of a, I'd say, a bump in excitement around cannabis, and mostly, coming up
Canada?
from, the US, and a number of companies all of a sudden, investor interest came rushing back, and the financing window opened up a little bit. So you saw a couple of companies, quickly raise money. What does that look like right now? I mean, is there any investor interest? Has it gone away? Is there still some idea that maybe something's going to happen out of the South, and people might get
It's a good
excited?
question. Actually, I was speaking with a US group on Friday, and they feel that people don't believe in them now. They're very optimistic there will be some change.
Mhm.
There's going to be some change at some point. Right now, what they say is the longs in the US believe it's going to happen, but they might as well wait. It's
Mhm.
really a trade right now in the US.
Mhm.
What we're seeing in Canada, I'm seeing in Canada more, is people saying, um, okay, A, I need to see the catalyst in the Canadian industry.
Mhm.
B, I want to make sure I understand who the winners are that are going to emerge. But I'll plant a little money. We don't have a lot of volatility or a lot of trading in our stock. And a big part of that is we have a lot of longs.
Mhm.
We have a lot of people that think the share price is too low and they're not willing to sell. I think that we're going to continue to see that, which is a fascinating place to be, because uh, price movements build liquidity,
Mhm.
right? As we know, um, positive and negative. And so the US momentum and movement is also belies a bigger question behind the US operators, which is many of them are operating in single state, vertically integrated
Mhm.
markets with limited licenses, which is a great advantage right now. And I was down in the US in September, and met with a number of the companies. A number of them said, how did you do that? How do you have a brand? Like, you guys
Mhm.
actually have brand recognition. I don't understand that. We can't get that. And could we license your brand? And our response was, you're not dealing in a competitive landscape where your quality really matters. And
Mhm.
secondly, licensing a brand just makes it a package. Our brand has value because of the brand promise and the execution behind it and the quality of what we do. So why would we license the brand if you're not going to put the quality behind it? And we can't guarantee that without
Mhm.
a lot of work. So um, I think that the US has an advantage of scale, but
Mhm.
they're going to have a big lesson um, when interstate commerce comes up, because that quality metric
Mhm.
is going, they're not dealing with competition in the way that we are in Canada. And I actually think that's going to put Canadian companies in a good, the strong operators in a good position, because we're being forced to build the
Mhm.
SOPs, the systems. How do you do it? How do you compete? How do you make it
Right.
great every time? That's meeting actually quite a high bar in terms of safety, quality, microbials, pesticide, etc.
Yeah. That makes sense. I want to remind everybody, by the way, if you're listening, if you got some questions you'd like me to ask Margaret, please use the chat function, and we'll fire that question off. Um, we always like to ask, just in general, like, new initiatives. Now, you mentioned a couple new products that you're working on, and the idea of always, working on better quality. But is there other shifts or any other, call it, initiatives that you're undertaking that you're looking forward
Yeah.
to?
So we're always launching new products. We've just recently come out and launched, and let me actually go back up to the front page because it's a little more fun to look at. We just launched with wildflower edibles that I spoke to, which
Mm.
are minor cannabinoids looking at particular states and need states for individuals. So, i.e., if I just want to take a small amount of something every night for sleep, what would that be? And this is looking to answer that. My brand team and marketing team will give me a really hard time if I tell you some of the fun things that we have coming up. But we do have some fun ideas in terms of and some products coming up. A big investment that we expect to be beginning and focusing on coming up is genetics, and looking at how we can become a leader in genetics as we look over the, a 3 to 7 year time horizon. And it's going to take that amount of time. That's going to be critical in terms of how does the business build and grow. In terms of other products, I think it's expansion of our existing range. So what you're going to see is us entering new categories. There's a few things I'm keeping in my back pocket. I'm also somebody who, I'm not going to tell you I'm going to do something. I'm going to tell you after I've done it. And then you can say, oh, good, it's in market. And you'll notice, well, you'll see a press release from us. It's not, hey, it's coming in 3 months, we plan to. It's, oh, we've done it and it's delivering. And that's what I think is really important in a market like this right now. We make a commitment, we go out, we deliver on it. Again, that's a business that happens to be in cannabis, not a cannabis business. Yeah. So what's to come? I guess wait and see. There's a couple of fun ones. And I'm of course I'd be dying to say it, but I will get shot at Dawn. But I'm really excited about seeing how edibles roll out across Canada. 1964 live rosin edibles. When we launched them in April, I am a cannabis consumer, but I didn't understand how what we were launching would be so different in market. So edibles have moved. What I've noticed is probably up the West Coast from, everybody hears about Silicon Valley doing mushrooms and all these things, but really being big in California, up the coast to Vancouver. Here, we're really seeing the professional groups more interested in edibles and in weed in general, and it's starting to shift across the country. Not yet totally in central Canada, but will be interesting to see how that starts to move. But within that, when you take a product that's just bad quality weed that you push in through extraction into a distillate oil, basically it's sort of an Everclear to alcohol versus, and that would be what a cheap distillate is, right? You're going to feel the effects, but you might have a little, like a headache, you might not feel great. It's kind of an inconsistent effect. What we're doing is we're taking, and you can see the picture of the plant here, we're going to flash freeze a full, beautiful plant, and we're going to squish it down almost like an olive oil press. We're not going to put solvents in it. We're not going to put butane through it. We're not going to do all these other things that companies are doing. We're actually just going to do a flat squeeze of it, and we're going to let the juices run out. And in that, you're going to get what's called a live rosin. And the live rosin, when you consume it, is as an edible, is much more consistent with the smoking effect, but it doesn't get processed through your lungs. It goes through your digestive system. So you get a more full-bodied high. You get a much better experience. So the price point's a little higher, but what we find is once people try them, they don't go back to the cheap Everclear alcohol. And the distillate gummies, they stay in the live rosin, because you can actually take what looks like a smaller dosage and it has a better effect than the same dosage in the cheap stuff. So what we're looking to do is shift the conversation to people to understand this is not all about the THC percentage. It's actually about the quality of what you're consuming. Very similar to what you don't hear about from Scotch is, the Islays are 14, or actually they're much higher than that. I don't even know what percentage Scottish is. I'm sure it's probably 35 or 40. We don't hear people talk about the lowlands versus the Islay and what the alcohol percentage is. That's what we shouldn't be doing. This is more about an experience.
Right. Yeah. It's amazing how many parallels there are with alcohol. And then once you sort of get into good Scotch or good rum for that matter, or anything else, it's hard to go back. We've got some questions.
That's exactly what we're finding with our products is people go, oh, yeah, now I can't, like, and this sort of comes into, they say they can't go back, but it comes into that recession discussion, which is when you just don't have dollars in your pockets. We find right now, aspirationally, people are really holding our brands up there, and we're very proud of that, but they just don't have the dollars in their pocket. That's okay. We're going to try and find price points for them to come in, and we're going to hold what we're doing, and we're going to come out the other side. And when they're ready for it, we're going to have built that beautiful brand and legacy, and we're getting better every day with the quality. So as they come back into buying that premium, they're going to be more and more satisfied every time.
Perfect. We've got some questions in from some of our viewers here, so why don't we rifle through these? So we talked about sort of the price compression product, but do you believe prices will continue to compress into 2024, or will they persist until the consolidation of the industry is over?
Just spent many, many hours on that this week. We think there's going to be continued price compression. I can give you an example that in Ontario, a Simply Bare 28-gram bag, which is an ounce, is on a per gram basis, the cheapest way to buy Simply Bare because you're buying more volume, is about, call it $240, depending on where you are to retail. Our 1964 is about 190 for the same pack. We actually don't sell 64 in that, but that's the price. Our homesteads, which we consider value, about 160. The average in November, the average 28-gram sold in Ontario was $119. And there was a lot of listings at $80. And $80 is a floor set by the OCS because they won't allow product to be sold below that. They don't think it's responsible. What we're seeing, that is people just turning product into cash just to sell it at any cost because they've already grown it, trying to save their businesses. So yes, we are expecting more price compression. We don't love it. We find there's a delta in the price elasticity where everything would fall off a cliff. And I think anybody with a good, better, best strategy would tell you that there's, if you all of a sudden go from a 50-cent differential to a $1.50 differential, people maybe won't buy. That's what's happening here. And it's doubled down. So yeah, we do expect it to continue through this year. I think, again, as companies fall away, it will stop.
And maybe you touched on it just now, but have you taken any, has your business taken any price reduction measures? Are you competing?
We have. Yeah. We've had to react to the market. Again, it's about that delta, right? We want to stay sitting in the premium category. We believe the price to value ratio is right. But we also believe that as you come out of the other side of this, it is hard to take price back. And if you want to have your brand positioning in the right spot, there's a little white knuckling that you've got to do as well. So, we don't believe we're a value product. We're not looking to sell a value product. There are consumers that are willing to pay more for great quality, and that's what we do. So it's tricky, but I mean, by price reduction, we're not taking 20% price reduction or anything like that. We're talking very minor tweaks around the edges.
Yeah, gotcha. Yeah. Okay, so on the M&A side, the consolidation side, are you guys active in that market? Are you guys looking to buy assets right now, or?
Great question. So my words would be, we are opportunistic and strategic. We have a 3-year strategy plan, which is obviously confidential in terms of how we want to win and build the Arc'teryx of weed in Canada, the best premium company. We are on our way to doing that, but I think there are a number of people out there that think their assets are still worth their 10 cents on 100, I guess they're worth the dollar. We would probably say they're worth 10 cents on the dollar.
Right.
And it's also the working capital cost to get a distressed facility up.
Right.
Personally, I would be more interested in onboarding either a distressed asset that is very, very, very cheap, and I don't think they're quite cheap enough yet, or looking at companies that add strategically to us as a business, that bring profitability, that bring alignment, and that bring and build great. You want to be the 1 + 1 = 3. And I think that's, we are also, I think you can see, again, we're business people. We're looking to build a great business. And 1 month to the next, whether we do it in the first half, second half, or in 25 or 26, that'll be market conditions and opportunistic. But I don't think we are in a no on anything. And we're a public company. You're always up. You're always looking around. Yeah. That being said, the winners that are starting to emerge know who they are. I think the banks have done a pretty good job of pointing them out. Some of them have problems with their balance sheets. We're not looking at being behind the 8 ball on cash. We think that keeping some powder dry is very important. And we think we are going to build this business brick by brick. I had a shareholder ask me the other day, he said, "You sounds like you're doing a lot of singles. And do you have any home runs?" And I looked at him, I said, "Well, I actually would have told you all these things that we did were home runs this year. But what I'm going to tell you is anybody who watches baseball tells you that a game is won on on moving bases. It's not on every home run. I mean, those are just the glory shots. So I think you have to remember that we're building a business. A business comes from consistent execution.
Yeah, exactly. Okay, so two-part question here will be the last one before we wrap it up here. What do you think about headset insight into estimating the market share of cannabis brands, and are any of your brands listed on headset platforms?
Great question. Headset's a great tool, by the way, and it tends to be very focused on the US, for those who aren't aware. We are not, I can't answer the specifics on that. I don't believe they are. We use Hifyre data broadly because it picks up store retail data. It excludes Quebec, but it does, there's no proper Canadian data. There's not like Nielsen data as though there is in the US, in the CPG world, but data is getting better. The problem that we have with Hifyre data, which we use it externally because it's what the analysts use as well, and we want to make sure that people can cross-reference what we're doing. It pulls the premium segment as anything 20% greater than the average price. Well, with price compression and price dropping, brands that are not premium brands, until they adjust price, are falling into that, right? So the rankings aren't as meaningful right now because of that. And so I would say Hifyre arguably is the best place to go in Canada. I think Reddit is actually a pretty good forum. We look at it a lot. We look at it to hear what consumers are saying. We monitor our complaints, and we take our complaints list that we monitor includes all Twitter and Reddit and Instagram and any social media, and we track and we follow every one of those, because for every person that isn't writing to the company or going back to the store, they might say something negative on social media, and that doesn't count. It's really important that we're addressing and listening to all of those things to get better.
Yeah, gotcha. Well, listen, thank you so much for the time today, obviously, but as investors now watching you guys and you continue to sort of move forward, what do you think are the things that we should really focus on? What sort of metrics or maybe catalysts do you think make sense to pay attention to over the next little while?
For us, it's actually investing for the future. We are now where I think a lot of cannabis companies thought they were 5 years ago, when they said, oh, we're going to invest in this and invest in that. And rather than just throwing good money at, $10 million at a project, we actually have scoped things out. We're looking at investing in a genetics facility, and investing in, it's really P&L costs into things like that. We're investing in an ERP system this year. That'll be considerable cost. What it allows us to do is it will allow us to get bigger, and it allows us to do it more efficiently. And so we think this year, while everybody's focused on just trying to stay alive, we're going to focus on the things that in 2 and 3 years really drive us forward to be a more winning business. We're in a recession. Stay focused, do what you do well, keep delivering the numbers this year. And as we come on the other side of oversupply and various other things, that brand promise is really going to, we all know brands will be built. It's just who's actually building them. And I don't think it's somebody sitting in an office in New York saying that they can build a brand in Canada. I just don't think a label on a package because it looks pretty builds a brand. A brand is because you trust it.
Agreed. Listen, did we miss anything? Is there, or more importantly, what's the key thing you want to make sure everybody walks away with today?
I would say watch this space. And I think that success is going to come out of the groundswell of community. Cannabis is very recommendation based. So for us, as I said at the beginning, winning LP of the year was a real shock, actually. And I was really thrilled because I've been at this for 8 years and I'm very proud of what we've built. But more importantly, we care about what the bud tender thinks of us. We care about what consumers' experience of our product is. And winning the People's Choice Awards from over 800 bud tenders really means that we're in a position to be a loved brand going forward 5 and 10 and 20 years. And those are the things, as you look forward, if someone were looking into the Canadian industry to say, what's going to be here? It's things that are built brick by brick properly with the proper brand, with listening, with pivoting, with building something that resonates with people. This is how great companies are going to be built, and that's what we're looking to do. So if you're looking for the quick trade, maybe we'll move up and down through the year, that's right. But I see, and I look around our leadership team and I look around our business and I think, ooh, this is exciting. We're in that moment, and you can see the board we brought on board. they're heavyweights.
Yeah.
They're here because they think this is kind of fun and that we can do this. So very proud of that.
Fantastic. Well, Margaret, well, I mean, congratulations. I don't say
Thank you.
just for surviving, but you guys are thriving in an industry that's obviously going through a fair bit of turmoil. Great job so far. Thank you for joining us today. We've been speaking with Margaret Brodie, CEO of Rubicon Organics. Again, the symbol is ROMJ on the Venture Exchange. Margaret, thanks for joining us, and we look forward to catching up with you in the near
Yeah.
future.
I'd love to have you out for a tour too, Paul.
We will take you up on that for sure.
Yeah, it's lots of fun. Thank you,
Excellent.
everybody. And if you have any other questions, direct or otherwise, please feel free to reach out to me. And always happy to answer any.
Fantastic.
Thanks. Bye-bye.